Coming back to you, Craig, what does equity income investing look like in a world of higher interest rates, which we have now?
Yeah, so in a period of high interest rates and rates staying high, income investing starts to look particularly attractive. I mean, just mathematically, your current income that you're receiving from dividends becomes more valuable relative to the dividends you might get in the future through rising dividends at a later date. And so that happens with high interest rates, and that's certainly been why income investing has been in vogue recently. It also throws up the point that in a high inflation, high interest rate environment, you're likely to see more volatility in markets, given that central banks are walking this tightrope between curbing inflation and not hitting growth too much. And so being invested in companies that are able to withstand any recessionary environment, and those are typically ones with high free cash flow, and those again are correlated with ones that can pay out high dividends over time.
Yeah, I do think in these uncertain times, it's very reassuring for investors to see those dividends coming in and increasing over time. Joe, high interest rates world, what does equity income investing look like?
I'd first say I wouldn't call it actually a high interest rate world. It is high relative to the period since the financial crisis, for sure, but I would say that's a period with ultra low interest rate, in fact the lowest in the whole history of the Bank of England going back to the 18th century. If you go back to the period before 2007, the level of interest rates we got at the moment is similar, really. It wouldn't have been out of place in that era at all. But I think the great advantage of equities is the dividend growth. And I think a particular period where there is some inflation around, if you're in fixed interest, by definition, it's fixed. It doesn't go up, the income. So I think the advantage of equities in this period, is where people are facing rising bills, is that you want to be in a vehicle where you get rising dividends.
Absolutely. We show the 5-year dividend growth figure as a percentage per year on our website, so investors can take a look at that, as well as all your dividend history. Quite honestly, we've got yours going back to, I think, to the 70s. That's as much as we can fit on the page. William, in a higher interest rate environment, what do you think equity income investing is going to look like?
Well, I think the higher interest rates that we've got now are just one feature of the new investment world that we find ourselves in post the invasion of Ukraine some 12 months ago. That really was a turning point, both for the real world and for the investment world. And I think several things follow from that. I think investors are going to have to learn to live with higher levels of inflation, as a consequence, higher interest rates. But I think other things follow. I think the era of get rich quick, which arguably we had when money was cheap and plentiful the last 10 years, is well and truly over. If you look at the money that's been lost in the NASDAQ in the last 12 months, the S&P index, cryptocurrency, my goodness me, 40, 50% down if indeed you're in something that hasn't been suspended. And I think investors are going to have to recalibrate their expectations of the sort of returns they can expect. I think they should start to focus more on the risk that they're taking when they're in certain investments as much as the potential reward. And I think the old-fashioned virtues of compound investing, patience, buying value stocks and tucking them away for a long period of time will all come back into fashion. And that, I think, leads you to the UK market, solid blue chip shares, good corporate governance, good dividend paying. And these are global companies. The UK stock market is not the UK economy. 70% of revenues of FTSE 100 stocks comes from overseas. And so you're buying, when you buy the FTSE 100, which is where Claverhouse is predominantly invested, you're buying global on the cheap. And while you wait for the investment skies to clear, you're being paid a very good, consistent dividend, particularly in an investment trust structure, along the way. And that seems pretty compelling in this environment to me.
Yeah, well, I think you're right. I think the world has changed. And obviously, we've got a lot of interest from private investors in these sort of equity income investment companies. But I think they will be even more reassured in these uncertain times that at least they are going to see those dividends and they're investing in big sort of blue chip companies. I'd like to thank you all very much for joining us today. It's been great to hear our managers talk about their strong dividend track records and how they achieve them. But I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. So if you're in any doubt, you should talk to a financial advisor. Thank you so much for watching.